So I'm going to show you how to do an income statement, and this is just a repeat of your introductory accounting course. So of course what we do is we always put the company name on our statement. So we're going to do this in good form. So I'll just call this one Creamer. And then the second line is we put what type of statement this is. So this is called an income statement. And then the third line is telling us what period it's for. So it's for a period over time. So in this case, I'll just say for the year ended. So the period is a year. And then we put the date. So I'll just assume this is December 31st, 2018. So that means that this statement covers January 1st, 2018, all the way to December 31st, 2018. So you could also have different periods. You could have 1 month, or one as common as 1 quarter, or usually the longest period is 1 year. So now we always start with sales. So this is how much you've sold. And I'll just assume that we've sold $2 million. And then we have our cost of goods sold. And then what I usually call this is just COGS, so COGS. So you can abbreviate that. So that's how much it cost to either make your product or to buy the product and then sell it. And then the difference is your gross margin, or we can also refer to this as gross profit. So you just take 2 million minus 1.5 million, and that means you have 500,000 left over from after you make or buy the product and sell it, and then you have this amount of money to cover your selling and admin costs. So the next cost we have is our selling and administrative expenses. And we'll just assume that that comes to 220,000. And then we have our amortization expense. And let's just say that's 50,000. And then once we list all of our expenses and our amortization expense, we can subtract that from the gross profit. So 500 minus 220 minus 50,000. This gives us 230,000. And we often call this operating profit. Or EBIT, okay? And what that means is earnings before interest and taxes, okay? So that's 230,000. Now what we'll want to do is subtract out our interest expense. And let's pretend our interest was 20,000. And then we'll subtotal this again. So we'll take our 230 minus our 20, and then this gives us our earnings before taxes. And we can abbreviate that and just call it EBT, earnings before taxes. So you take 230 minus 20, that gives you 210,000. And now we'll deduct our taxes. And let's just pretend the taxes were 99,500. So then we subtract that. So take the 210 minus the 99,500, and this gives us our earnings after taxes. So 210 minus 99,510 is 110,500. Okay, so just notice I put this in good form. So that means a $sign at the beginning and the end of the statement, and a double line when I'm finished the statement, and then a line right before I start doing math. So that's just what those mean. And then one thing I just want to point out here is the selling and administrative expenses. So these amounts here. In some other questions, they could actually list what expense that is. So I could say rent expense or salaries expense or advertising expense. So sometimes this is a laundry list, so you'd have to pick them up. And then sometimes it's just, they're giving it to us just like here. They'll give us just the sum of that. And that's your income statement.